Most beginners think that they need $1,000 to start day trading. But what usually happens is that they start with the hype, no clear plan, and blow their first account within weeks of trading. What I want to do in this video is to show you how to start day trading crypto and Forex the right way, even with just $100 and zero experience. This video is what I wish I had before I got started. It will have saved me years of losses and try and errors. This same strategy is the same one I use with my community every morning on Discord and Telegram. We break down the setup, the entry, the exits, and the psychology behind every sniper trade that we take. And for this video, I'm going to start from the beginner level. So if you're just getting started, you can follow along step by step. Now, before you place your very first trade, you need to understand what kind of trader you are. So are you a scalper, meaning that you want to get in and out of the markets in minutes? Are you a day trader? You want to hold trades for a few hours, but ultimately you want to be done with that trade by the end of the day? Or are you a swing trader? You want to hold positions for days or even weeks? Your choice depends on your lifestyle and how much time you can commit to trading. Me, I consider myself a dynamic trader. I switch between swing trades and day trades depending on the setup and the time that I have to trade. If you look at this trade that I took and shared with my community, the first trade here is a swing trade. It ran for 2 days, and the second one is a day trade. It lasted just 3 hours, but actually had a better reward. Both of them are valid. The key is knowing which one works for you. Now, when I share the strategy, the choice will be clearer to you. So now you know the type of trader you are. The next step is to set up your tools. And listen, you don't need 20 indicators or 10 monitors. All you need is a clean setup and the right tool. Start with a demo account always. It lets you practice your strategy without risking real money. Until you are confident, you can now put in your real money. Here's what I use. So I use a charting tool. I use TradingView to analyze the markets and mark up my setup. TradingView is clean, reliable, and beginner friendly. I'll visit shortly in this video to show you the strategy I've been talking about. The next one is a risk calculator. I use the FS crypto calculator. This one calculator works for crypto, Forex, indices, commodities, and even synthetics if you trade derivative. It tells me exactly how much to risk per trade based on my stop loss. Then you need a broker. For crypto trading, I use Bybit. For Forex, I use Trader, mainly because they have tight spread and low trading costs. If you don't have an account with any of this, it is important that you use the link in the description because it ensures that by default, your account is set up with the lowest spread and fee. Now, here is something most traders skip, but is it the pro traders? They don't skip this thing. It is journaling. Now, most people think that journaling is boring, and truly, journaling is actually boring. But it is what separates gamblers from real traders. The tool I use for journaling is called Edgewonk. It automatically analyzes my trade and shows me which asset makes me the most money and which one cost me more. Which session gives me better results? Is it the London session, the New York, or the Asian session? And whether I perform better with swing trades or day trade or scalp. It gives me a lot of data that is going to make my trade better. So over time, journaling shows what is working so that I can double down on that, and it exposes what is draining my account so I can stop doing that. If I'm not journaling, I would not know this. You can find the link to all these tools in the description. And again, don't overcomplicate things. All you need is one screen, a clean chart, and a process that works. So now your tools are set up. Now let me walk you exactly how I took these two trades. step by step, from top-down analysis to the zone where I entered and how I manage my risk. I will also show you how to keep getting my trade setup even after this video. So I only use two indicators. So we have the stochastic RSI here, and I also use trading sessions by Sonadab. Now each week, which is either Sunday night or Monday morning, I start with a top-down analysis. And so I start from the weekly to the 1 hour for swing trade. I do weekly only once a week. Then daily I do 4 hours to 15 minutes for swing trade and also for day trade. I make sure I get to the 15 minutes before I consider taking a day trade. You can even go lower to the 5 minutes to take a day trade. Now what I'm looking for when I do my top-down analysis is breakout structure, supply and demand zone, imbalance, which is a fair value gap, liquidity, that is equal highs and equal lows, and I'm also looking for efficiency and inefficiency in price action. So now this is Euro USD and I'm on the weekly time frame. So what am I looking at? If I go this way, you can see that there is an imbalance here. So why is it an imbalance? It's because look at this is candle A, candle B, and candle C. This candle A and candle C does not touch. There's a gap between them. That's what we call the fair value gap or the imbalance. Now, at the top or bottom of an imbalance, this imbalance originated from the top. So therefore, this candle before the imbalance is my supply zone. If the candle is below, then it is my demand zone. Hope this makes sense. Now, these are areas that the chart will likely reject from. So markets will usually reverse from the demand and supply zone. Now, but this is weekly time frame, meaning that each of this candle represent what happened in 1 week. So it's going to take several weeks before the candle actually get to this particular place. And this is actually months and years of action. From here, it's actually June of 2021. But we are interested in this particular section. This here and this bottom here is a range. So that is going to form my range for trading this week. So I'm going to pick this two. So this is the top of my range for this week. And this is the bottom of my range this week. So I'm going to trade within this range for this week. What can price do? Price can either go up or price goes down. Which way is it going to go? That is what we're going to determine by going down to the daily time frame. In the daily time frame, I can now mark out more stuff. So here I have fair value gap here and another fair value gap here. This fair value gap originated from here. So I'm going to mark here as my demand zone. And this fair value gap, the origin is from here. So I'm going to mark here as my supply zone. So again, what can price do? Price can either do this or price can do this. Again, which way is it going to go? Another thing I can mark out in this region is my break or structure. So if you look at this price action, we had a low here. This low led to this high, made another low here, and then made a high and a low here. So when this low get broken, it's called break or structure. That actually happened here. So we had a break or structure here. So this is a break or structure. This then tells me that if structure is broken to the downside, it means that price is likely to go down. So what this is telling me is that we might have this happen this way and we keep on going down, or we might have this happen, then it keep on going down. These are the possible scenario of what can happen. But I'm not taking a trade yet. I'll still go down further to decipher what is happening. So the next thing I do is to go to the 4 hours time frame. Now the first thing I did is what I do once a week. From here, This is what I do from every day. This is what I do every day from this particular point. So looking at here, nothing has actually changed, but we can refine our zone. You see that the fair value gap extends to this particular point. It can be reduced to here. So I will reduce this zone, this one up. I can also reduce my supply zone to here. So what are we looking at? Has anything changed? Nothing has really changed yet. But we have a break of structure here. So if I look at this particular point, so I have a break of structure at here, this way. So this shows that price can do this. There's a possibility it does this, but I don't know yet. Again, I have to go lower because I don't trade on the 4 hours. So 1 hour, what will I see when I get to the 1 hour time frame? So what I'm seeing here is another structure here. So this is a high and a low for here. I can use the parallel to draw this. This is my high and this is my low. So I can trade within this region. What this now tells me again is this. If price breaks above this, then we can see it go higher. If price breaks below this, we will see it go lower. For this time frame, this is what I'm looking at. But if I investigate more, what am I seeing? Within this structure, we had a break of structure here and price came lower and broke structure again. So internally, there is another break of structure here, which means that price is likely to go higher. There's something I also want to point out. Let's go back to the 4 hour time frame. I want to point out liquidity. So liquidity is where we have equal highs and equal lows. If you look at this, it is not equal high, but they are relatively equal high. So I'm going to draw a line here from here to show liquidity. So let me go back to the 1 hour. Looking at this now, I'll be ruling out the option of this happening because there's more probability that this actually happens. Why? Because we have liquidity line here. Where we have liquidity, it means our price is likely to go take that liquidity. And again, if you look inside this particular structure, we had a break of structure here, means price is going to go higher, but we have a demand zone below, which is this. This is my demand zone. This tells me that price will likely do this. It's likely to come down into this demand zone, then go higher. So this forms the basis of my trade. So what I can do is to place a swing trade here. So how do I place a swing trade? I take my long position, place my trade this way, and I want to get a target. How do I know the target to go with? Now this is another demand zone here. We have a fair value gap here, and we now have this. So this is what this zone is what I'm going to target for my swing trade. Now, if I go down further to look for trades for my day trade, I'm now on the 15 minutes. But let's see how this plays out. So we had a tap in and we started moving. Now, if I was to make a day trade today, I'll look for a trade within here. But on this particular day, I didn't do day trading. I just placed my swing trade. Let's continue. So now this is another day. This is the Asian session. What can I trade today? Let me go back to the 1 hour. In the 1 hour here, so we had a push upward. Now I believe we're going to likely go up because we have taken this demand here and we are pushing upward. But there's opportunity to even take more trades, which is here. So if I pull out my tool, there is a demand zone here as well. There's a demand zone here, and we have a bunch of liquidity, relative liquidity lying up here. We don't have a break of structure, but we have a bunch of liquidity lying up here. So why do I think this is going to move higher? Because we have this first liquidity that has not been taken and this second liquidity that has not been taken. So what my play for, what I suspect to happen is that the market comes down again, then goes higher. This is what I believe is going to happen. So going back to the 15 minutes on the next day, this is what I'm seeing. So in 15 minutes, this is what I'm seeing. I can see again a fair value gap here. And what I see here again is relative liquidity. You have a bunch of liquidity here that are relative, right? This is actually an equal high. This is a perfect equal high, as a matter of fact. A perfect equal high on the 15 minutes. And again, I'm seeing another demand zone here. I want to take it to the bottom. So what does this tell me? This tells me that price can actually come to this demand zone and go higher. Now, it could come down to this particular zone, but it is more likely to go take this liquidity than to come to this demand zone, since it's already coming from this demand zone, right? So it means that for this next day, I'm going to place my trade not here. I'm going to place my order here. So I'm going to place my order here. And where do I target? I could target here, or I could go left on the 1 hour time frame, and I can actually target here. We have over here an efficient price movement. There's no fair value gap. So this is the fair value gap first one we have. So I can actually target this particular point and take my trade up to this point. So this is giving me a risk reward of 5.96. So let's see how this plays out. So price came in, tapped into that zone, and immediately it pulled off, taking this first liquidity, taking the second liquidity, and my trade was closed here. And you can see that my second trade actually got closed here. I break down trades like this every single day with my community, Monday to Friday, on Telegram and on Discord. And once a week right here on YouTube, we do the same thing usually on Monday. So if you want to catch that live trade, you want to see me trading live and analyzing the market, just hit the subscribe button and turn on the notification so you don't miss it. Now, even if you master this, my strategy and all, you can still blow your account. I know this because in my very first trade in 2019, I lost $1,000 in under 5 minutes. One thing that beginners fail to wrap their head around is that you will have losing trades. It is a normal part of trading, but not losing $1,000, you're almost your entire trade account in one trade. In trading, you only need to aim to win only 50% of your trade with a minimum risk reward of 3 hours. In other words, when you win 3 times of what you lose when you lose. Let's say I'm risking $10 per trade and I lost 5 trades. That is $50. I win 5 trades at a risk reward ratio of 3. That is $150. My net profit is $100. This is even though I lost 50% of the time. So this is the power of risk management. And I made a full step-by-step risk management video to help you to know exactly how to do this. And that is the video I recommend you watch next.